Welcome everybody to Magnate's webinar on why invest in Liverpool. And the webinar is called The Potential of Investing in Liverpool. So welcome to everybody. My name is Keith Egan. I'm Managing Director of Magnate Assets. To give you a little bit of explanation around who Magnate Assets are, we are an independent real estate portal that works directly with UK property developers to showcase their developments to overseas investors and expats worldwide. Our aim is to offer information and impartial information for investors and be able to connect them directly with the developers of their choice based on their investment requirements. For today, we've invited Leah Higginson to provide an insight into this presentation in why Liverpool could be a great place to invest. Leah is a Liverpudlian and she has a wealth of experience and of personal and professional. And again, Leah, would you like to add more to that and introduce yourself?
Thank you, Keith. Thanks for having me today. As Keith said, my name is Leah Higginson. I work at the Integritas Property Group as the Global Investment Manager. The Integritas Property Group are a northwest of England based developer. We're an ethical and experienced developer in the UK. I personally have been in the UK property investment market for the last 10 years, helping investors globally to navigate the buy-to-let market in the UK.
Thanks, Leah, for that. Thank you for the introduction. So let's delve into this and into the property investment in Liverpool. So why does it have so much potential, Leah, if you can take us through the information and that we have?
Absolutely, yeah. So Liverpool is a city located in the northwest of England. It's very much an emerging city. So it's a city which has got tons and tons of potential. Most of my clients, when it comes to looking for an investment property, specifically in the UK, they're looking for two main things. They're looking for a strong rental yield and they're looking for capital growth as well. And Liverpool is a city that offers both of these to investors. It's got affordable property prices, very high rental yields and a high demand as well, with tons and tons of potential for growth. Liverpool has an average property purchase price of around £180,000. Now, this is a really attractive price point because it's much lower than the UK national average, which is £289,000. And when we compare that to the likes of London, where the average property price is around £508,000, it's clear to see why Liverpool is really popular with many investors because the price points are very, very attractive. Now, what this means from an investor's perspective is that they are getting much more value for their money. So the type of property that they can buy with £180,000 is incredibly high quality in comparison to a property, for example, in London for £180,000, which they would struggle to even find, to be honest. Now, why this price point is also important from an investment perspective is because what this shows us is that Liverpool has an incredible potential for growth. So because the property prices are still so low in Liverpool, it just means that there is so much space and room in the market for these properties to go up in value. Now, one of the other main reasons why Liverpool is so attractive for investment is because it outperforms every other region in terms of growth and in terms of rental income as well. So as you will see on the slide, Liverpool is set to increase by 28.8%. Now, these statistics have come from Savills, who are a London-based property services company. And what they do is they release 4 5-year forecasts to predict what's going to happen in the market and to advise investors on where the best locations will be. And as you can see on the screen, Liverpool is outperforming every other region in the UK. It was top of the table on the Savills report with a predicted 28.8% growth over the next 5 years. Now, again, when we compare that to London, the capital city in the UK, London is only predicted to go up by 14.2%. So Liverpool is going to get double the growth that London is going to get until 2028. In terms of investors, when I speak to investors, a lot of the time they will think that an investment in London is going to be most beneficial, with it being the capital city. But these statistics just go to show that at 14.2%, you'll actually get a lot more growth in the city of Liverpool than you would do in London. And just to give you a comparison on the rental returns, Keith, the average rental return on a long-term let in Liverpool is between 6 and 7% net. Whereas in London, if you were to buy a property in London now, the average rental yield is 3% net. So we're talking double the rental returns and double the projected growth as well.
So you can buy double the properties as well for the same price and get double the rent and double the capital appreciation in moving forward, which is great. And I know like Liverpool it's a regional city, but it's quite a big city. And, you know, we've spoken about, you know, talked through this over the last few days. But is there anywhere in particular that you think stands out for investors in Liverpool, and why that would be an area that is of great interest, and what's going on around that area as well?
Yeah, absolutely. So we really had a really exciting article released by the Sunday Times newspaper a couple of months ago. So the Sunday Times put together an article which was to help educate investors, and it was the top 25 places to invest in the whole of the UK for 2024. And the Liverpool Docks area was #1 again on that list. So it's just topping all of the tables. So in the Sunday Times article that they released, it was all about the regeneration, the turbocharged riverside regeneration. And the reason why that's so important is because regeneration goes hand in hand with capital growth. And this is one of the reasons why the Sunday Times has listed this area of Liverpool as the #1 area to invest in the whole of 2024. It's because of this supercharged regeneration. Now, on the screen here, you'll see that there are some examples of the regeneration which is taking place in Liverpool right now. It's absolutely enormous. The scale of the regeneration is much higher than any other city is seeing in the whole of the UK. When you put all of the regeneration together in Liverpool, it totals £14 billion. So it is a huge scale regeneration. The city is undergoing a transformation. It's going to be completely unrecognisable in 5-10 years' time. Now, like I said, there's a few examples on the presentation of the regeneration which is taking place. Now, again, regeneration goes hand in hand with capital growth. So the percentages, the forecast that we looked at earlier from Savills, quoting 28.8% growth over the next 5 years, that does not take into consideration the impact that the regeneration is going to have. That is just an average across Liverpool. So in reality, if an investor invests near the Liverpool waterfront, near the Liverpool docks, which was named the #1 place, they can actually expect much, much more significant growth than the 28.8% that was listed by Savills. To give you a direct comparison of this level, this scale of regeneration and the impact that that will have on properties and the property values. When I first started in this industry 10 years ago, I was recommending for my clients to invest in Manchester because at the time, Manchester was seeing a very, very similar scale regeneration to what's happening in Liverpool now. And my clients who invested with me 10 years ago in Manchester, they have more than doubled the value of their property. So the property that they bought 10 years ago is worth double what they paid for it. So they've had 100% capital growth in a 10-year period. Now, I think it's really safe to assume that because a lot of this regeneration is being done by exactly the same company that regenerated Manchester, that it would be fair to assume that we can expect a similar scale growth and a similar level of capital appreciation in Liverpool now, specifically near the waterfront and the docks.
That's great, Lee. And I know when we were talking this today, I was kind of pushing you into, give me an example, a real example of where of some project that's ongoing at the moment and how that would impact an investment or making that investment decision. And I know that we spoke about the Moor, which is where the Bramley Moor, where the new Everton Stadium's going to be, that's being built. So do you want to run through that and how that impacts an investment decision?
Absolutely, yeah. So the Bramley Moor Dock Stadium is a state-of-the-art brand new football stadium. This is part of the Peel Group's Liverpool Waters regeneration. And as you can see from the image on the screen, it is on the Liverpool waterfront, on the Liverpool docks, in the area which has been named as the best place for investment. Now, this stadium is a £500 million stadium. So like I said, it's state-of-the-art, it's brand new. Now, why this particular part of the regeneration? Because this is only a very, very small part of the regeneration, but why this is really interesting for me from an investment perspective, it's not just because I'm an Evertonian personally, it's because the regeneration, the stadium, is not just going to be used for the football matches. It's also going to be used for outdoor concerts. So we're going to have some huge artists, international artists who are coming to Liverpool and performing in this stadium. And it's also going to be hosting other major sporting events and large-scale conferences. Now, the reason why that's interesting from an investment perspective is because short-term let or serviced accommodation or Airbnb investment is going to thrive in this area. So currently in Liverpool, there is only 7,000 active hotel rooms, and the tourism sector is enormous. So what we're going to see is a huge demand for Airbnb properties in this area.
So that's basically where you're going to say that we've got a much bigger demand in terms of short-term lets in that based on the tourist industry. And obviously, you've got some information about the tourist information on what's going on in Liverpool right now. And like this stadium's going to come along at the end of the year. So I presume that's going to have a really big impact on that demand.
Absolutely, yeah. So the Bramley Moor Dock Stadium completes at the end of 2024. You're absolutely right. Now, like I mentioned, there's only 7,000 active hotel rooms in Liverpool. So we're already at the point of an undersupply of serviced accommodation, hotel rooms, because the tourism sector in Liverpool is absolutely booming. So Liverpool gets 38 million visitors a year. And that's for, various different reasons. You've got the football, you've got it being the birthplace of the Beatles, that attracts a lot of tourism. You've also got the shopping centres, you've got the nightlife. So Liverpool was actually very recently voted in a Which survey as the best large city break in the UK. So a lot of people go to Liverpool to stay on a short-term basis, whether that is for the football, whether it's to go shopping, whether it's for a night out. Absolutely booming tourism sector. Now, in terms of the demand, like I said, this Everton Stadium completing this year, that is only further going to put a strain on the undersupply. So with only 7,000 hotel rooms and not that many Airbnbs on the market, what we're going to see is a massive undersupply. Now, when my investors say that what they really want to do is they want to maximize their rental income, Short-term let is the way to do that in the UK, but it has to be in the right areas. So you can get a significantly higher rental yield by doing a short-term let property than you would do if you did a long-term tenant.
That's great, great information, Leah. And personally, I love Liverpool because I like to go and see the Beatles Museum. So, and I'm from Manchester, so it wasn't too far for me to get there. So in terms of that and putting all this information together, we kind of sat and said, let's put an example together. So we've been working with you on the latest development that Integritas have released, which is Portside Place, which is based near the docks. So we've kind of put that together. If you want to run through, I think you've got a bit more experience on that, run through that kind of development and how that is reflected in the numbers that we've spoken about today as a real example.
Absolutely, yeah. So thank you for that, Keith. So the Integritas Property Group has just launched a brand new development called Portside Place. Now, we're really, really excited about the potential with this, because not only is it in the area which was voted as the #1 area for investment in the whole of the UK, but it's perfectly situated between the waterfront and the city centre. So it presents a really exciting opportunity for investors to be involved in the area, which has been named the #1 place for growth by Savills over the next 5 years, the #1 place for investment because of the regeneration by the Sunday Times, and the place which is offering the highest rental yield when it comes to short-term let. So we're really excited about this particular development. I'll give you a little bit more information about the development specifics, a bit of an overview. So this development consists of both 1-bedroom and 2-bedroom apartments. It's very, very close to the Liverpool waterfront and very, very close to the city centre and all of the regeneration. Prices start at 181,000, so really good value. Because this is an off-plan development, it is below market value. So you've got a 15% below market value discount. Now, again, what this doesn't take into consideration is all of the impact that the regeneration is going to have in the area. So, for example, Keith, if you were to buy a property in Portside Place, 15% by completion is the absolute minimum that you would earn in equity. In reality, when we do factor in the regeneration and the impact that that has on growth, you can expect for the property to be worth significantly more than 15% come completion. Now, if anybody wanted to secure an investment, the payment structure is really attainable and really easy. It's a 5,000 reservation, a 20% exchange 3 weeks later, and then the investors don't pay another penny until that development is completed and ready to start earning them an income. As we've touched on already, it is short-term let applicable. So I am really excited about the potential, about the rental yields that my clients are going to get here, as well as the long-term growth that they're going to benefit from as well. I'd also like to point out that as a service that the Integritas Property Group offer, it's not just a case of us being a developer and building these fantastic developments for investors to buy, but we also offer a full 360-degree service. So a lot of my personal clients are international investors, they're overseas investors. So for that reason, we have to offer a totally hands-off investment model. So we help with everything from securing the property to the management of the lettings, whether that is long-term, whether it's short-term, it's totally hands-off. And we even assist with the resale in the future. So if an investor buys with us and they decide that they want to sell on the property in 5-10 years' time, they can come back to us and we help them to do that as well. So it's a really nice service that we offer. I'm going to give you a bit of an example of the returns that we can achieve. So we've touched on the Savills report, the 5-year growth forecast. So as you can see here, based on an apartment at 181,000, which is 15% below market value, you can expect a minimum of £87,000 in equity in growth on that property. Similarly, with the short-term let model, we're looking at £74,000 for an Airbnb style investment in this particular development. So for an investor, if we look at the total 5-year return on investment, you're looking at a gross 85% return or 17% per year. Now, I can safely say there is no other city in the UK which is offering returns anywhere close to this. This is without a doubt one of the highest yielding and the highest growth investment opportunities that I've ever worked on.
That's great, Leah, and thank you for that information and that example. And I think we've kind of come to the end of the presentation in terms of that, and kind of a conclusion that we've taken from this is that if we look at the Liverpool as an opportunity, the potential is that it's at the right time in the cycle. There are proven examples out there like Manchester, when you're on the precipice of this £14 billion investment, get into the right areas, get into the right places, looking at the development and the opportunities, the short-term lets and what's there, it seems to be almost too good to be true. Is there anything you want to add on that?
Absolutely, no, you're right. So in terms of, the Manchester comparison, we've seen it happen. I personally have seen it happen. So like I said, 10 years ago, my clients have doubled the value of their property. So it is very much achievable. For me, the key thing is when you're looking for an investment, particularly if it's going to be your first investment in the UK and you want to make sure that you get it right, the key for me is investing ahead of the curve. So you don't want to invest in somewhere like London or like Manchester, where we've already seen that really, really significant growth. What we want to do is we want to invest in a smart way. We want to follow the smart money. So when you have companies that are spending £14 billion in an area, you want to be a part of that. And if you get into that area nice and early at the beginning, because the regeneration in Liverpool in total is going to last 30 years. So it's huge. It's going to completely transform the area. So it's only around 2 to 3 years in now. So we are still very much at the early stages of this. So what that presents for investors is the opportunity to enter the market while prices are still as low as they are and really, really maximize that growth. So yeah, thank you for that, Keith. Just to summarize, double the returns that you're going to get in London in terms of both rental yields and growth, £14 billion worth of regeneration that our investors can capitalize on and be a part of. And it's outperforming every other city in the UK.
I was going to say, I think it's probably a great opportunity for people to look into. And again, we're sharing that information to try and give people that. We will send out obviously all the contact information for Leah. We'll put everything in the chat and there, so people can contact you directly if they want, or come through Magnate. That's fine. We're here to provide information to connect people direct to developers. So if we have any questions on that from anybody in the webinar, I think we can write the questions out. There's a Q&A forum that's part of the webinar. We can look through the questions, and we're quite happy to stay on here and answer any of the questions that are there.
Absolutely, yeah.
So does anybody want to put the Q&A? We've got some questions that we have coming in. So we've got one from chatting. So the question, Leah, maybe you want to answer the question, Leah, is finance available on projects in Liverpool or Portside Place in particular?
Yeah, that's a great question. So the Portside Place development does meet the mortgageable requirements in the UK. Now, obviously, mortgages are quite circumstantial for investors. So there is a lot that it's not a blanket, whether somebody can get finance or not. But if an investor believes that they are eligible for finance in the UK to leverage for the investment, then absolutely. The only difference with that model because the deposit level required on our scheme is 20%. Now, they would still follow the normal payment structure. The only difference is, upon completion, they would add an additional 5% to make up their 25% buy-to-let mortgage deposit. So yes, Portside Place is a mortgageable development. It meets the mortgageable requirements. And if an investor is eligible to get a mortgage, they absolutely can.
That's great. I've got another question from Michael, just asking, how much do you need to pay as deposit for an apartment in Liverpool?
Yeah, so the minimum price point on Portside Place is 181,000. So based upon a 20% exchange, that would be 36,200. But we do take a 5,000 reservation as well. So the minimum investment that an investor would need upfront now to secure one today, for example, they would need just under £42,000, and they will be able to secure a property in Portside Place.
That's great. I've got a question from Joseph. Joseph's asking, when is the actual completion date of the project at Portside Place?
Yeah, so Portside Place is completing in Q2 of 2026. So we're just under 2 years away from completion, which again is why the development comes with the 15% below market value discount.
Okay, so I've got another question from John. John's asking, would he need to find his own solicitor for the transaction?
No, so we work with a fantastic panel of recommended solicitors. So we've got solicitors who are specialists for working with international investors, and then we've got UK-based solicitors as well. So we offer a full 360-degree service. So if somebody reserves a property with us, they will have the assistance of our sales progression team in the UK. And the sales progression team will help them to instruct the solicitor, help them with all of their legal documentation to get them to the point of exchange. And then what's quite nice, Keith, is once a client exchanges with their solicitor, we as a company send out monthly construction updates. So every month we do a video. We've got a YouTube channel, and we do a video updating all of the investors on the progress of the construction. So it's really nice because the investors can watch along as their property comes together and is built. And then on completion, the solicitor, the same solicitor they used for exchange, will also be there to help them to complete on the purchase.
That's great. I've got another question here from Amit. Amit says, is there, for foreign investors who are not obviously UK nationals or whatever, is there like a clear process for foreign investors, and are you able to assist with that?
Yeah, so the process is very, very similar to a UK investor. So we actually make the process as easy as we possibly can. Like I mentioned a little bit earlier, around 80% of my clients are overseas investors. So the process itself is very straightforward because the solicitors that we work with, they know that a lot of our clients are international, so they can do everything remotely. So what I mean by that is things like the identity checks that they have to do, things like paperwork. The paperwork can all be done electronically and remotely. And the transfer of the funds for exchange can all be done via bank transfer. So the process for an international investor is exactly the same as a UK investor. And, you know, part of my role as the investment manager is that we help our clients every step of the way. So we're always at the end of the phone. You know, it's what we aim to do here is to create really long-lasting relationships with our investors. So I personally have got investors I've been working with for 10 years. And that is always our goal, is we want to, you know, provide really good quality investments. We want to make the process as easy and as smooth as possible for people. And we want to deliver on exactly what we've said we're going to deliver on. Because that way, you know, if a client has a really good experience, then they're going to come back and they're going to trust us and they're going to use us again. So that is the whole aim of our service, is we make the process as easy and as simple as we possibly can for people to invest in the UK.
Another question has come up. So from Ravi wants to know how can they exit in the future? At what point can they exit if they change their mind, or what is that? How do they exit the investment? What are the ways in which this can happen?
Yeah, absolutely. So we'll use Portside Place as an example. So if a client wanted to sell their property, they bought a property in Portside Place and they want to sell it on in the future, they can of course come back to me and I will assist them to do that. So we do offer a resale service. So if somebody sells their property, wants to sell their property, they can come back to us and we will help them to do that. We work with hundreds of thousands of investors globally, so resales are not a problem for us. With Portside Place, that can also be put on the normal resale market. So they could list that with a local estate agent, they could put it online, they can sell that through any channel, and there's no limit on when they can resell or dispose of the asset. They can do that at any point.
Got another question, the finance and the mortgage.
Yeah.
So if if the investor's based overseas, can you assist with that in terms of the mortgage application?
Yeah, so we don't have any affiliated mortgage brokers that we work with, but we definitely can recommend brokers that our other clients have worked with. So we don't have an affiliated mortgage service, but there are many, many brokers out there who are what we call specialist brokers. So they'll work with specialist clients like international investors, where the process for getting a finance is slightly different. So yes, we can definitely put our clients in touch with the right people to help them to navigate that.
Kind of another question that just come in, which is kind of similar to that. So obviously there's a tax structure in the UK. So is there a way in which investors from the overseas should really look at that? So asking like, how do you manage the tax situation being a non-resident
Yeah.
investor in the UK?
Yeah, so tax, obviously, particularly for our GCC clients, the income tax is something which is applicable in the UK, which again is why it's really important to make sure that you're getting the highest yielding property as possible, to make sure that your returns, are going to be good. Now, the tax in the UK, what the management company do is they actually hold back the tax. So anybody who invests in the UK will be eligible to pay, I believe it's 20% income tax on their rental income. But the management companies that we work with will actually assist the clients. So the clients won't need to do file their own tax returns or anything like that. It is all dealt with for them in-house. So again, it's all about making it very accessible for people and making it really as easy as possible for people to benefit from the investment that Liverpool specifically has to offer in the UK.
I think one of the things I'm asked for quite a bit is around, do I form a company so to own and they have to do it individually? And I think it comes down to sort of individual circumstances. I think definitely people are going to look at finance to look at that. Then I think a company structure is probably something that's recommended. But again, I think on that, we and you have contact for people to specifically talk about their situation and how to manage that to minimize tax, to look at your inheritance, various things like that, to make sure that you've got the right
Yeah.
structure in place when you do it.
Definitely, I'm just a disclaimer, I'm not a qualified tax advisor or mortgage broker, but we can offer advice based upon our experience. And, I've been in the industry for 10 years. So there are definitely benefits to purchasing a property under a limited company. There definitely are. But like you quite rightly said, Keith, it is very individual. It depends on, what the client is wanting to get from that. And, if anybody has any sort of specific questions around that, or wants to understand a little bit more about the process or about why a limited company might be potentially beneficial for them when investing in the UK, then, I'm happy to answer questions if people reach out directly. I'm happy to go into more detail because, like I said, it is quite specific to that individual. So I can't really give a sort of blanket response for that. It is on a case-by-case sort of basis, what I would recommend.
I think that's it. And I think that we have the contacts and you have the contacts to help people make sure and navigate through the whole process uh, if as and when people look at their investment requirements and what they're doing. Okay, I think we've not got any more questions coming in. I'll give it one last minute for anybody else to add any questions in there. But in the meantime, I hope everybody that's attended has found it useful. And we're here to follow this up. Everybody want any more information about Liverpool, about projects on Liverpool, Portside Blades, or they want to connect with Leah, I think we've shared contact information around that. And we've got the WhatsApp number for Magnate, which is our UK WhatsApp number. So if anybody wants to get in contact, we're going to email all of this, going to follow up. We've actually got a Why Invest in Liverpool guide that we'll send out to all of the attendees as well. It's got a bit more information about Liverpool. It's got more information, a little bit more information about Portside Plates as well. One more question that's coming. Do we know what the service charge is yet, Leah?
Yeah, perfect. That's a brilliant question. So again, as us being an ethical developer, we've actually fixed our service charges with our developments moving forward. So the service charge at Portside Place is £2.80 per square foot, which is far lower than the national average for service charge on a new build. And that is fixed for the first 3 years. So again, we're doing something a little bit different here. With fixing a service charge. Not a lot of developers will do that. The reason that we wanted to do that and the reason why we have done that is because we want our clients to know what their investment is going to look like, and giving them that guarantee, that security of a fixed service charge allows them to know exactly what their returns will look like for the first 3 years. And again, this boils down to us being a really ethical developer, because prior to the new legislation, which was released about ground rents and developers charging ground rents, we'd already completely eliminated ground rents. So just on that, while we're on that same sort of topic, I'd also like to highlight that with Portside Place, there is 0 ground rent to pay, and that will remain that way for the full 999-year lease. And the service charge is fixed for 3 years at £2.80 per square foot, below the national average.
That's great, Leah. So I think we've got through the questions in there.
We got
so
a
I
few.
think at this point, it's been great speaking to you, and thank you for your time. Thank you to everybody who's attended. I hope you found it useful. Got some information from that. We'll follow everything up via email to all our attendees with the guides, with the various links as well. So thank you again. Thank you again, Leah, for that. Thank
Thanks
you for
for
everyone
having
attending.
me. Thank you.
Thanks, Leah. By the way, just to add, Leah is actually based in Dubai.
Yeah.
So Leah can meet people directly in the region as well, and represents Integritas in Dubai, in the Middle East, the GCC countries. So again, thank you, Leah.
Thank you.